So next up we've got assessing affordability and customer vulnerability. So just wait for them to come off stage. So we're trying to hold back the flood of questions around affordability and vulnerability on the screen actually. So definitely there's pent up demand around talking about this. And so I want to bring onto screen basically the next panel. So that is Elliot James, who's the Debt Policy and Strategy Lead from HM Treasury, if Elliot's here. We've got Sheraz Afzal, who's the Chief Legal Compliance Officer from Quint. Sorry, Sheraz. And we've got Vanessa Northam, who's the Partnership Director from StepChange. So I just know if you guys just want to come up onto stage, that would be perfect. So moved it forward. Wonderful. There you are. So yeah, let's say affordability and vulnerability seems to, it's changed quite a lot in terms of its meaning, what we've talked about. We've already talked about that a little bit in the first session, where we were talking about, there isn't just a vulnerability flag. We're getting into more understanding around the nuance around a customer situation, really. So it feels like this conversation, although we've been talking about it a long time, it feels like it's definitely subtly changed and actually matured over the last, I would say, like five years, certainly. We're now having a slightly different conversation, probably than we've ever had before. Now, just the first question I wanted to, I suppose, go to, and Vanessa, I was going to go to you here, right? Which was, there's this figure out there, and it's actually mentioned in one of the Slido questions in the last one, which is half of all of our customer base is vulnerable. That's sort of like the headline number. I don't know whether people feel that's accurate or not. I suppose, Vanessa, I was going to ask your view, sort of, with StepChange in terms of, like, is that view accurate? But then also, what's the nuance within that 50% number?
Thank you, Chris.
Do you want to use the microphone just for the? Use the microphone, Vanessa. Vanessa. Yeah, Vanessa.
Sorry, can you hear me?
Been told off there.
Yeah, thank you for that nice, easy question. I think it builds on what was said on the previous panel. So the first question is vulnerable to what? And then I think we're all potentially one step away from being vulnerable. So, we could have a car crash on the way home and end up, with all sorts of life-limiting injuries. But I think the challenge with that broad brush, I don't know how many people are in the room, but, half of us are all vulnerable. I think there's a real challenge to that assumption. If you look more detailed into the financial lives, which I'm really struggling under the floodlights, in terms of when you start to unpick that, there's degrees of that vulnerability. So, 14% of people are heavily burdened from a financial perspective. You've got 77% who have reduced their spending, rationing energy, and then, 10.4 million people have got a challenge with their mental health. So there's a lot to unpick. The flip side to that, and I think this was one of the questions that was put in there, is should we all be designing journeys that assume a level of vulnerability, and then the support and the engagement and the servicing is inherent, so that regardless of when and if we become vulnerable, we're catching everybody from the get-go.
Mm-hmm. Sheraz, I was going to maybe ask you in terms of do we need to redesign our journeys? How do we need to start thinking about our journeys with that sort of the complexity around vulnerability? And I suppose within that mix also put around financial difficulty as well, which is financial vulnerability as well.
Yeah, okay. I'm going to sort of give you my perspective on what I think vulnerability really means and then what that means to the journey. So we sort of live in a world in which we've always assumed that humans act rationally, right? So, in law, people talk about the reasonable person, and we have this assumption that people will act in their own best interest, that they will sit down, weigh things up, and make a sensible decision. And what I think we've discovered over the last 15, 20 years is that's false. People don't act rationally, And what the regulator has been trying to do over that period is to make businesses understand that And therefore, if people don't act in their own best interest, then there's actually a fair chance they will act, and sort of create harm for themselves. And I sort of think that's what vulnerability is about. And so if we say that are half the people in this room vulnerable, well, potentially, because if we have a system that assumes everybody acts rationally, weighs things up, and makes a sensible decision, and people aren't doing that, then actually those people who aren't acting rationally are going to be at risk of harm. And that really is the underlying issue, I think. And I think we have to sort of confront the reality that says, if we were all doing great things, if people weren't coming to harm, then actually there wouldn't be this kind of policy focus on trying to protect consumers. So when we're thinking about customer journeys, inbuilt-in collections, and the regulator doesn't help themselves, right? Because they sort of push us down this affordability, income expenditure leaves you a number, so people act rationally and, use all that. But I think, beginning to think that people aren't going to act rationally, people are going to act emotionally, people are going to act according to their own biases and heuristics, and sometimes people will act, and sort of, not in their own best interest and to create harm for themselves. And that's really difficult to predict what they're going to do then. So how do you do that, right? So I guess it's got to be around being flexible, it's got to be around being dynamic, it's got to be around doing, someone else earlier was talking about, are the days of sampling over, and is it all 100% quality checks? Well, possibly, right? Because actually, for consumers, taking out a loan is probably the second biggest thing they'll do in their life financially, if it's not a mortgage. And so actually people are taking these really big steps. So to us, we're in the trade, right? It's a commodity. We sell hundreds of loans out, every day, whatever. It's nothing to us. But for people who are applying for a loan or have got problems with a loan, it's one of the most important things in their life. And I think that's why, that comment around is the days of sampling over and it's 100% quality control checking might be the direction we need to go in.
Yeah. I mean, you talked about financial lifesaves, and Elliot, I was going to come to you from a government point of view, from an HM Treasury point of view. I mean, when we look at, I suppose, debt loads for people, I mean, we've also got the consumer business, consumer lending business, but also there's like the central government and then I suppose the local government business. I mean, what's your kind of view around like how do we bring some of what we've seen from a private sector point of view into central government or a public point of view? I mean, how much further do we have to go? And I know it's your focus, right?
Yeah, and I mean, is this microphone on? I've got two microphones here for some reason. Good. I mean, it's a big question. I think the start of it is talking, and about 7 years ago, our team and government debt management function was established and started talking to the sector for the first time, I think, and engaging with the advice sector. And actually, I remember the very first meeting we had when we were literally on opposite sides of the table, and there was a lot of myths that came out of that meeting, and there was a lot of people getting quite angry and standing up and shouting. And then we moved on past that and started to think about, okay, how can we come together now then to solve some of these problems? How can we apply what the sector's seeing in a government context? And obviously we've got legislation and other things like that that govern us, so some things are a struggle, but it was more about what we could do rather than what we couldn't do. And from that, 7 years later, I think you'll see products on gov.uk that we've developed as a partnership, like a fairness charter, that sits across central government at the moment, and I know local government's probably a conversation that everyone wants to have, and how much more can we do there. That's something that we're talking to colleagues about. We're not at that point at the moment. So I'm mainly talking about central government here, but you can see a fairness charter that applies to the whole of central government, setting out how people should expect to be treated when they're engaging to repay the debt. And it is about engagement. And I know Vanessa will probably talk about some of this stuff as well, but generating a conversation, using data to generate those conversations. It came up on the panel earlier, I think, life events and the understanding of who's got data on life events that could trigger a conversation. Government has some, the sector has some, so we're really trying to work together on that to see how we can drive better engagement, drive forward as a partnership, and kind of learn from each other. Because I think it kind of goes two ways, right? Government's learned a lot from the sector and things that it could be doing better, but we're also trying to educate the sector a little bit on the things that we'd really like to see that really help us to operate in that space a bit more effectively. So open communication channels, moving away from the feeling of we're throwing something over the wall, now it's in government's court, government go and deal with it. So I think those sort of things are really key to moving this forward. But as has been said before, this is a journey. We're nowhere near the end of it. I don't think it will ever end.
Yeah, I mean, Vanessa, coming back to you, I suppose it's one of the things that we always say is, I mean, because there's one customer at the end of it, even though they might have multiple products, and including multiple relationships with government and everyone, right? I mean, how do we best sort of, I suppose, consolidate that? I mean, because you see that every day in terms of
Well, yeah, I mean, typically people have got between eight or nine debts by the time they come to us, and they're dealing with multiple sectors with different regulations. I mean, spoiler alert, I've said this a number of times. However, there are improvements. The announcement about council tax. I think if you can't afford one payment, I tell you what the answer is: pay me for the whole year. That has got to change. I mean, if anybody here who's trying to collect on a loan and says, "Oh, you can't make this month's direct debit," well, I'll tell you what, I'd like the full loan. It's insanity. But that is a customer's experience of one part of those 9 organisations that are chasing them for money. I spend a lot of time speaking with the energy sector, and I do want to recognise how much improvement has been made in the FCA regulated sector in terms of through regulation. But again, if I then try and make an arrangement in the energy sector, I've got all sorts of I can't extend that beyond 2-3 years to repay. So improvements are happening. However, at the end of the day, there is a consumer who's trying to navigate all of this. And a charter for government debt, great. What about almost a kind of an expectation setting, regardless of which part of collections that you enter, so that if we're going to get people to engage, we need to break down the stigma, and we need people to understand what they can expect. Wouldn't it be great if the lowest level of, or the most punitive area of debt collection rose to be as good as some of the practices that you guys are leading on? Yeah. It might take another 5 to 10 years, but that's going to be key.
Yeah. I mean, I suppose just sticking on vulnerability, I mean, it does feel like the conversation around vulnerability has changed, and it does feel like it's changed from being one around are you vulnerable enough to now around the sort of assessing support needs. I mean, that's the one thing that that feels like that's kind of coming through, and that feels like it's maturing around the sector, I mean, across all the different industries. I mean, how do we think that will kind of play out within firms? I mean, certainly I've seen some of this being talked about within financial services, in utilities. I mean, I don't know if you're thinking about that from a government point of view as well, Elliot.
Support needs, particularly, as opposed to general sort of vulnerability.
Yeah.
Absolutely. I think that there was a shocking stat earlier. Yeah, 50% of people are vulnerable, and the right question is to what, and what data are we using here? If you speak to different parts of government, or if you spoke to them a few years ago, vulnerability was almost a byword for disability, which does lend to support needs. But then there are other types of vulnerability that are temporary, and kind of trying to understand that and navigate that is really complicated. I think we've established that. Using data to support those conversations, though. I know there's we've spoken to the private sector about this a number of times. I know there's an Experian product called Support Hub, where it is less about what you're vulnerable to, what's your life situation, to more how can we support you, what are the things that you need to engage effectively. So one of the things that we started to do, we launched recently actually, was a communications toolkit for government, recognising that first communication with someone is the key conversation, and that can set up the whole of the rest of the journey. So using that as a way of engaging and using that as a frame for identifying support needs is one of the things that we're doing right now, right at the moment. Is it perfect? No, we're already getting some feedback that means we probably should change some parts of it. But again, I think it's the start of that conversation. And I imagine we'll be talking to people in the room about this as well. How can we improve this? What are the things that you're seeing that we're not, that we need to fold into it? I mean, it is important to say that I've noticed across government the conversations moved away from repayment, and it is more about engagement and resolution. An outcome is repayment of debt, great, that's the thing we all hope for, but there are loads of other outcomes as well that we're measuring at the moment and trying to figure out, more in line with the consumer duty style, was that the right outcome for that customer? And if it wasn't, how could we improve that? Is something that we're also doing. I think it's really important, and that'll fold back into that support needs conversation.
I mean, Sheraz, you talked a bit about behavioural kind of elements there, and I suppose in terms of like support needs and getting customers, I mean, it's always a challenge to get people to flag if they had some sort of vulnerability. I mean, that was always a challenge. What about support needs as we sort of move into this new world around, I need help with this, right? Which is a kind of a different conversation, or I have this particular attribute. I mean, how do you sort of see that sort of like behavioural aspect in terms of engaging with those customers to be able to flag where and when they need to get support?
So I think it's a really interesting question, and I think it comes back to what is the causal event that is causing that vulnerability. And let's just use plain English, right? Shit's happened. Something bad has happened. So at that moment in time when the end user, the customer, is grappling with that event, that's probably not the best time for a lender to kind of get in touch and sort of go, hi, sorry that your life has fallen apart. Can we talk about our direct debit, please? But our sort of collection strategies are actually based around missed the payment, get onto them right away. So, that's not helpful to the customer or indeed to the lender. And then, of course, there's going to be a point when the customer themselves wants to, is the impact of the life event has kind of receded from the peak, right? And they can now start to sort of, figure things out. That's a good time, perhaps, to talk to a customer. Of course, as we all know, if we don't talk to them within a space of time, they'll probably never get back in touch and never pay us back. So there's a sweet spot, I think. And so for me, the question is, how do we get to that, when the customer's ready to engage, how are we there with the support that they may need? And of course, and the second point is, depending upon the type of life event that's occurred, their best time to respond is going to be different, right? If it's a material bereavement or a divorce, then the sweet spot of engaging with the customer is going to be different, right, than if it's, say, an acute medical injury, which is, but they're sort of back on the mend a couple of weeks later. So I think this is where vulnerability as a broad brush is helpful, in as much as it says, actually, life is happening, let's help figure it out. But the precise event then will dictate, when that sweet spot to engage is.
But I was going to come to it, Vanessa. I suppose there's the vulnerability, the event that drives the support need, but it's the support need that kind of drives the outcome, that gives you the good outcome. It kind of feels like, I suppose it's, Vanessa, I don't know, you must see some of this stuff, right?
Yeah, I'm going to use an example of a previous role where we were using open banking to provide debt advice just digitally. It's long gone now, however, but we were working with a consumer, and we got an extract from their open banking data, and this is no word of a lie. The transactions on a daily basis were Paddy Power, Bargain Booze, Paddy Power, Bargain Booze, Paddy Power, Bargain Booze. And the extract was insane. And, the frontline advisor was like going, what do I do with this? And you're kind of going, well, there's a gambling problem there. Okay, right. So we give all the advice. And then we go, is there an alcoholism problem there? Or is there other stuff you can buy from Bargain Booze? And, as somebody who was the vulnerability lead at that moment, I was like, I actually don't know what to do with this data. But there's clearly vulnerability. And I think when you talk about support needs and vulnerable to what, he clearly had amassed quite a significant amount of debt, and you could kind of see two strong indicators. But how would a debt advice organisation respond to some data where that consumer hasn't self-declared? Because we were comfortable enough to say, we think you've got a gambling problem. Turns out it was his wife, and that's a story for another day. But we didn't know what to do with the alcoholism or that transaction. And I think what we're saying is we're going more down a data route, we're going more down an AI route. It would be really interesting what AI would have done with that data and gone, hey there, can we help? Looks like you've got an alcohol problem. And who's prepared to sign that off as a customer journey? But it's just, I think, you know, we're touching on self-declaration, but increasingly we're talking about data. What are we going to do with some of that data? How are you going to intervene? What's that going to look like?
And I suppose the question is, when does it become intrusive versus when does it become informative and protective, I suppose, to certain something. Elliot, I don't know what your kind of view is.
I was going to pick the microphone up, and then I thought, we've not got an answer to this. We've not got an answer to it, because we're grappling with it exactly the same stuff. You know, HMRC have obviously got data on people's income, and they can see it fluctuate. Is there a point when they intervene if that fluctuates and it impacts on tax? How sensitively is that treated? DWP have got lots of data on benefits. People shift on and off benefits all the time. Is there a point when this should be intervening, or is this just how people's lives work? It's such a sensitive area, and I think I said earlier, you know, we know we're not the experts in a lot of this stuff, and we're bringing the experts in, but I think even the experts are saying we don't entirely know, we're not entirely sure. What we all agree on is noticing it is the first thing. Noticing a change is the first thing, and that's really important. Figuring out what to do with it is different, and we're not there, but we know we need to do something.
Sure.
Well, I mean, I hear you, and I agree with everything you're saying, but you know, we can probably work out some of the answers relatively quickly, right? So in the first place, in the first instance, do no harm. So let's not make it worse, right? And that's where forbearance is about, for example, you know, and so again, we get a bit lost in the sort of the tools and whether they're shiny enough and cut well enough or whatever, but actually, what we're actually saying is, do no harm. Let's not make it worse for that customer. And then the second thing is, you know, just be a human about it, right? So I really, and we all have this, don't we? We ring a contact center and we get awfully frustrated because we're trying to talk to another person and they're just being robotic about it, right? Which is fine if you're AI, but not so fine if you're an actual human. So, you know, it's not difficult to engage with people on that kind of human level. The challenge, of course, is how to do that consistently at scale and all that kind of stuff. So I'm not saying the answers to that are easy, but I think we can all agree on let's do no harm, and that is, and sometimes that's giving the customer some space, you know, letting them figure these things out, right? And so actually, you know, we are not in a paternalistic kind of society. We don't have a proactive obligation to customers to help them recover from their alcohol and gambling problems, but we can certainly not make it worse, can't we? And we all know that, you know, ringing people, and we've all seen it, right? You know, people are, you know, that's what excessive contact's about, isn't it? Well, let's not do that, because that's not going to be helpful. And I think sometimes we can get a bit lost in the detail of what we can and can't do and just forget a little bit about some of these kind of, you know, more sort of basic things.
Do you think that needs to be more explicitly said in terms of like the do no harm as an example? Because definitely sometimes it feels like there's a bit of a fear factor around, because we all have hindsight, right? And I just talked about data in the last session, which is you can pinpoint that there's a particular customer here, we've all had them, it's an escalation that comes through and it's like, why did you do that, right? And there's a lot of finger pointing that kind of happens, right? And there's that fear factor we all have within our roles, right? That will happen, or firms will have within our roles. But I think in terms of like not making it worse is kind of a different way of looking at it versus going back and then sort of being held accountable for what you've done, if you see what I mean. And there's that factor that's kind of out there, which is protecting and doing stuff going forward versus, you know, going back and revisiting what happened before.
Well, and I think that's what the regulator's trying to do with principle-based regulation. But I think that's the point of it, right? Is, well, let's not be prescriptive, because we don't know what the right answer is going to be in every situation, because lives are complicated, you know. So let's have a principle. And so but then they're so I'll give you an example in the field of complaint handling. So DISP says that you must tell the customer if they've upheld or rejected the complaint. What a ridiculous thing to do. Right? If someone like complained to you about something you'd done, you wouldn't go, I uphold your complaint and, you know, I reject it. You know, it kind of just sets up this adversarial nature, you know. But surely that's not the way of resolving a complaint, and we all know that in real life. We would never do that in real life, would we? So I completely agree with you, right? There is definitely more candid guidance I think the regulator could give and actually take away some of this prescription that is silly, which is actually why I'm a big fan of the CCA reform and taking away some of the silly, shouty stuff that the law requires to send out to customers.
Can I?
Yeah, go on.
We wanted to have a heated debate, by the way, so this is good. We did rehearse this, maybe. I want to challenge you on be more human. I completely agree. But your interpretation of be more human and everybody else that's here in that scenario is different. And we've all got teams you are trying to drive consistency and deliver on a promise within your brand, within the regulations. How on earth do we be more human when AI feels like an answer to a lot of the problems? And it's just a question back.
Yeah, sure. And I will have to give you an answer to that. We could get more qualified or better paid people with more mandate doing the frontline collections job. It's hard, right? So right now, it's an entry-level job sometimes. So we did an experiment a while ago where we were paying our collectors 60k a year. And we thought we'd see what happens. Right, let's get really... So I was in the context of a runoff, and I had people who, you know what, were well paid and had a bit of spare time in their hands. So we said, well, let's try it. And I gave them loads of mandate. Said, you know what, just figure it out with the customers, right? Give them all the tools. You know, we started WhatsApping customers instead of sending them text messages, instead of sending them letters. With, well, this is how you would respond to somebody. And you know, we started to say, well, will we see the benefit of that in terms of improved collections and all that kind of stuff? And it didn't cost us any money, frankly. So I was no worse off. So I might have had, you know, much better paid staff doing the job. They were able to handle more sort of cases. So yeah, I mean, but that's a potential answer, right? Another potential answer is AI. You know, so one of the things I think about is, and this is your point earlier, someone's got 8 or 9 loans. If they're having a problem with one, they're going to have a problem with all of them. So we at Quint Group, we have a payments business called Acquired, and we do the payments for around about 60, 70 lenders and a bunch of debt collection firms as well. So theoretically, as a payments business, if one of those payments fails, chances are that the other payments that customer has got to other lenders is going to fail as well. So, you know, but at what stage can we sort of actually do something with that information to help people, right? So you've got to kind of wait quite a long time before they'll go and see some debt advice. We know that debt advice is oversubscribed. Why can't we have an AI model, right, that actually says, here is what the common financial statement says, put in your, you know what, connect it to the bureau, get all their balances, and just help them figure it out. So, you know, I fundamentally think that's probably where we'll get to in 15, 20 years. And in 50 years, we'll look back and go, why did it take them so long to figure that out?
I mean, I suppose it's that intervening early kind of conversation. Like, how do you intervene early to try and get ahead of some of these things? I mean, Elliot, what's your kind of view on that?
I realise why you've sat me in the middle now. I think that definitely, I mean, I agree with both sides. I think the problem is when someone engages, when someone, you know, rings up or emails or otherwise communicates with government, of course there's protocols in place for forbearance. Spent a lot of time working on that with the sector. That really works. It's when they don't, and often they're the people who need the help the most, right? And it's using data to somehow identify and engage with those people in a way that's not going to make the situation worse, in a way that, to your point, is, you know, being more human about it. We know that these are indicators that something's going wrong. What's the right point to step in? That's the trick. And I think there is a place for AI, definitely. No one wants to wait for hours on the phone to HMRC when it's a question that could be resolved really easily otherwise. But there's also a need to sort of channel engagement into an actual conversation where we can get so much more than just the data tells us. And I think that's a place we're trying to get to.
Vanessa?
I just want to say I'm not anti-AI in any way, shape or form. And actually, I think we're kind of agreeing for the same thing. Because for me, the ideal would be AI is helping that advisor understand me in a split second going, this is the 17th call Vanessa's made. Well, you know, instant stuff. You know, she's failed multiple payment arrangements versus, hey, this is Sheraz. never missed a payment in his life. Let's have a real opportunity to engage and find out what's going on because there's been a change. That's going to be the difference, I think, but with that human touch.
Yeah, and just touch a little bit on data there. So, I'm just personally fascinated by this, right? And I'd be interested in anyone's opinion on this. So, as I say, we do payments for 70 businesses. So we know when a customer's missed a payment. So we then know that what might the chain reaction of that might be for that customer, right? Well, right now, I have no regulatory framework in which I could intervene as a payments business to help that customer out. You know, I can't go and tell the other lenders because that would be a breach of sort of data privacy. The bureaus are sort of a bit, not useless, right? But the lag in data reporting we all know about, it's by the time it gets reported in the bureau, it's a little bit too late. I mean, I try and explain this to people. You know, you can be consistently 1, 2, 3, 4 days late with a payment. That will show us up to date on a bureau file, right? So actually, you could have a customer who over the course of 9 months is, you know, if month 1 they're 2 days late, month 3 they're 5 days late, month 4 they're 7 days late, right? But it'll always be showing us on time on the bureau. So that's unhelpful, right? We have that information. Lenders have that information, but do we use it? No, because it's. So I think one thing we have to do with data is almost let the data challenge our own opinions. You know, let's stop with our collective, confirmation bias. In our payments business, we're just about to release this lending report, and we did a survey of consumers, and one of the findings was so staggering that I literally went, really? Show me the underlying data. So apparently, and I have tried to validate this, and it is true, I've seen the data, when a subprime customer misses a payment, 2/3 of them say, well, I've got money in another account. Well, that's so counterintuitive. So counterintuitive. Like, how can that be true? So I love things which are counterintuitive because it hints at something that I don't know, right? So I think, for me, there's probably other stuff going on that we don't know, and I think we need to try and access the data to sort of dispel ourselves of some of our kind of myths that we might hold.
And I suppose the data, you can jump to conclusions, I suppose, with the data. I suppose you have to try and engage with the customer to find out maybe a little bit about what's going on, potentially if you don't have those data points. I mean, what's the best way to try and do that means that the customer doesn't come back as feeling like they're on the defensive, or I mean, what's the best way to kind of engage people? I mean, central government as an example. I mean, you must get quite a lot of that in terms of like, you know, potential fear factor around talking with you know, DWP or whatever it is as well. I mean, what's the best way of sort of getting people to flag that they might actually have an issue, using data to maybe prompt those calls?
I mean, it's the silver bullet everyone's looking for, isn't it? I think that the start of it, and I mentioned it before, is at the communications toolkit that we've developed. The switch from, you know, putting a big number in red at the top of a letter, and that's the first thing that the customer sees, to the support help being at the top of the letter. That's the start of it. Supporting that through other channels, which is another thing that we're looking to do, is another part of it as well. Using data to drive it, though, I think one of the things that's relatively recent in government is something called the Digital Economy Act, and there's a data sharing element to that. It should make data sharing easier across government departments. It should make it, rather than a 3-year thing where you have to go to the House of Commons and announce it and everything, it's done via correspondence. It should be more like 6 months. So we should be able to rapidly do data shares, test things out, figure out what works, what doesn't. But the reality is we don't really do that because there's a lot of nervousness. People want it to be the right thing. Ultimately, we pilot data shares that we think are really going to work, and actually we're just going to move them into business as usual because they really work. We now want to move more to a space where we're trying stuff, trying to figure out things with data that maybe we wouldn't have found if we'd just gone down the safe route. So take a few more risks, try a few more things, understand that actually it's all right to fail on some of this stuff. As long as it's not impacting the customer, so I'm not suggesting that, but trying to work out interdependencies between data that we already hold and being able to then use them, I think is the next thing that we're going to start to do. Because we already see a lot of data sharing. Everyone wants HMRC's data. Everyone wants to know how much someone's getting paid. We don't see so much around vulnerability indicators and sharing that sort of stuff, which is something that we could absolutely do.
So there's a big opportunity for cross collaboration there across the entire customer.
And this is not just central government. This is also people who provide services to central government. So we use a lot of debt collection agencies. So we could use their data in this space as well. So really trying to work with the sector on this is the next thing we're going to be looking at.
I mean, Vanessa, I mean, again, you see across multiple relationships for a customer. I suppose I want to ask you a little bit about, I suppose, there's declared support needs and declared vulnerabilities and undeclared ones. And you talked about your gambling, drink alcoholism, I suppose, potentially there. I mean, there might be other things that are going on as well. There might be, I don't know, domestic abuse. There might be other things that are going on as well. How do we best raise those conversations to get to those undeclared potential support needs as well? Because that's also an important element as well, I would think.
I mean, I think, so naturally, if you're going to be going to seek advice from a third party that you don't owe any money and you need to get everything out on the table, then naturally that's where, consumers are going to tell you. I think, you could meet somebody today and are you going to tell them their life story on first meeting? No, they're not. And if you owe them money, you're certainly not going to. But it starts from that engagement and that relationship from that get-go is how every opportunity to engage that customer should start before it gets into collections. So I don't know whether anyone's cracked that, but the way that you build rapport and build trust and engagement is not on a letter that says you owe us money, and then, the phone call's going to be all nice, softly and empathetic and tell me all your vulnerabilities, because the more you tell me, I can help. It's kind of got to start from the beginning of that journey, and I know that's kind of like a sort of a nirvana-like state. I think at the point when somebody does engage, and I think we're talking about engagement, not payment, and I love what you're saying about paying people 60k to do a job which is incredibly challenging and is almost like a negotiator, is how do you remove the desensitization that goes on in collections because it's just call after call after call after call after call, and am I empowered to do that bespoking? And interesting to sort of think about the offshoring of collections versus inshoring versus automation, because if you really want to understand what that's going on with that consumer, it is going to take a form of human-to-human contact in the main. That could be on chat. I'm not advocating that it's not. It has to be all voice or face-to-face, but it's got to be part of an ongoing engagement and a relationship with that customer, which I'm sure your marketing teams will be going, absolutely. But why aren't they working more in a collections environment? Why are they focused on the first part of the journey or trying to get them to buy more? What's the marketing happening within collections?
Yeah, I mean, Sheraz, I was going to come back to you, and I can see you picked up the microphone around, like, how do we get that initial engagement to then have that valuable conversation? I mean, what's the best way of introducing that? I mean, it might be a trigger from a vulnerability point of view, but there might be other ways of engaging with them to start to build that trust.
And I think the answer to that question connects to your earlier statement around undeclared vulnerabilities, because sometimes customers won't know that they're vulnerable, actually. So let me just tell you a little bit about why this is the case and what the academic studies are behind it. So there's something called scarcity. It's a scarcity of resources. And around about 15, 20 years ago, there was a study done in which they got a bunch of humans playing a game. And what they found was that people who had lots of resources on abundance, they played the game well. They made good decisions. People that had poor resources, and in this game, resources were the number of dice rolls you could do, right? It wasn't complicated. They made suboptimal decisions. And suboptimal defined in an academic sense of, look, there's no trade-offs here, right? It's just that decision is just objectively bad for you. But of course, the person, and then in this game, they then switched people around, and what they found was poor decision-making followed poor resources. So if you don't have an amount of resources, you will make poor decisions. But you don't know you're making poor decisions. So that's the problem, right? So actually, if you are walking, about to drive off a cliff and you don't know the cliff is there, you come along and go, hi, by the way, but drive off a cliff. Well, no, I'm not. So I don't have the answer to that question, actually. But that, I think, is the thing that underpins this. People who are making poor decisions don't think they are. And any of us who are parents know that it's pretty difficult to persuade people who are making poor decisions that they're about to. But that, I think, is at the heart of this conundrum.
I mean, I suppose somebody comes to like, how do you engage people before they get into difficulties and sort of like, and that ongoing kind of relationship with people. I mean, that can be difficult. I know that's something that, for example, the water industry struggled with as an example, but maybe probably central government as well, which is people don't want to engage with you until they need something, right? And so like, how do we start thinking about that earlier kind of engagement to when they do need you, then they know that they can trust you.
I mean, this is a really interesting question for us, because if you look at we've got a debt strategy. It's on gov.uk, and for the first time in that strategy, it covers resolving debt, as you'd expect. It covers improving the way that government resolves debt, but it also includes preventing debt. And we recognise that's an activity that takes place way upstream. Outside of our teams, a lot of the time in with policy teams as policies are being developed. And what we've found is one of the things that's often missing is any sort of consideration around debt, how it might be generated, and how that might impact people downstream. So one of the things we're doing at the moment is working with policy teams in Treasury, but across government as well, to embed questions around debt as policies are being developed, so we can intervene at that point, figure out, can this debt be avoided, first of all? Is there fees, fines, penalties, other things that might accrue that actually, if we had a bit of information about that person, we could stop those things accruing? If they do need to accrue, what's the best way to do that? What are the points where we need to engage so we can manage this with the customer, manage it through to resolution? Because a lot of the time we'll find that these customers have an ongoing relationship with government. You tend to have DWP, cradle to grave, they say. So you get a return. So making the most of those engagements that happen outside of the debt space is something that we're actively talking to policy teams about at the moment.
So it seems like almost like as an industry or as centred around the customer, it's like, how do we start this information kind of flowing around? I mean, there was one question that came up around how nice it would be to have salary information, I suppose, from a central point of view, things like tax returns in terms of people's lending ability from an income point of view, and that's always been a challenge for us as well. I mean, Vanessa, how often do you think working across sectors, I mean, where do we kind of sit with that in terms of like looking at debts across all of the different sectors, those kind of things? I mean, I know utilities has been an interesting area historically, hasn't it?
I mean, everybody wants to collect their bit of the budget, don't they? I mean, I think utilities are sort of way behind on the thinking in terms of and a massive underinvestment in collections. I think it's fair to say we had one of them in yesterday, and their ability to innovate and do what they want to do and keep up with it is massively lagging because of a lack of investment. In terms of, just repeat the question, because
it was. I can't remember.
You can't remember.
Working across utilities. Working across utilities. I mean, like, how are you finding that in terms of working there and development there in terms of like, sharing data and I suppose sharing information across that?
Yeah. So thank you. I mean, I think
I remembered.
One of the biggest challenges, I think, when we're dealing with utilities and sharing information is a lack of transparency about what the consumer owes and is using. So if we want to get somebody into debt advice, we need to understand what are their arrears, what they're using. Well, that isn't even separated in some utilities. So how on earth is the consumer going to understand that? And yet we're trying to build budgets where there's £4,500 worth of utility arrears to put into a priority so that there's something that we can try and find in the budgets. I think the other sort of big challenge is in terms of data in and relying on the consumer and just back into the different sector pieces, there's different utilisations of different data sources, and then that's all trying to then funnel into one single debt advice
I mean, it feels
process.
like we're moving along, it's getting more structured, but it's not quite there yet.
Yeah.
Government's, I suppose, one sector that is starting to get flushed out, but we're moving in the same direction, but at different speeds.
Yeah, I mean, it was said earlier about sort of consumer duty comes down from the FCA. Lo and behold, Ofgem are talking about consumer duty, and that can't come soon enough. The big challenge with utility is it's live debt. So it is a live and growing debt, and it cannot be stopped, and it cannot be cut off. And somebody who was previously moved from collections in financial services to utilities is like, I don't know how to stop or how to collect effectively when that balance is just going up and up and up. In banking, it was easier.
Yeah. Okay, good. I mean, so I was getting distracted here by one of the questions when it runs around like AI. So Lee's talked about AI is proving to be more human in many examples. I think human relates to kindness, compassion, respect, and empathy, non-judgment and love. Right. So that's the statement. I mean, how much do you think AI can fill in for some of that? And that's kind of an interesting challenge there around, can AI actually be more empathetic in some cases versus the human, depending on who the agent is and maybe the quality of how you brought them on, I suppose. Sheraz, do you want to go?
I think non-judgment's probably the biggest thing, actually, because these life events that happen to people, I mean, they're quite sensitive. I don't want to tell my deepest, darkest secrets. There's somebody on the phone, but actually, there's a sort of anonymity and confidentiality, I think, with AI. Look, right now, I listen to law podcasts because I'm a lawyer, and right now we're talking about, is there a role for AI in dispute resolution instead of going to court, right? And the premise was actually an AI might get a better answer than a judge, because the judge won't remember all the law, right? So actually AI can. And actually, should we be using AI as an independent dispute arbitration process before going to court? And that would improve so many problems about access to justice and people not getting poor decisions. Judges famously make a lot of mistakes between the hours of 11 and 12 because they're hungry for lunch. So AI can certainly help with that. So I completely see a scenario where actually the first time you're in bother, 15, 20 years time, actually there is a industry-funded AI collections bot that, you have a bit of bother, you go in, it agrees a forbearance across all the lenders and nudges the customer to write you back on track. I can definitely see that happening. That would be my...
I mean, there's an interesting stat. I was talking about LLMs like ChatGPT, etc., and they're talking about one of the highest use cases now went right at the top was counselling or advice or those kind of things, which is like almost like their interpersonal kind of like counselling, having your own personal advisor, probably because of the anonymity. I think is one of the biggest uses.
People under the age of, this is the funny thing, right? People in the age of 25 use large language models differently than people over 25. They use them like friends.
Yeah.
They talk to them that way. It's like how we use smartphones like this. They're so fluent with it, and that's where I think when that age group matures as a vintage and they're our age, they will have a completely different relationship with large language models than we do now, and that is almost like the little bit of rat that's being eaten by the snake, I think. So I sense we might be dinosaurs.
Yeah. Well, I suppose the only scary bit of that is whether the large language model will be like your mate. You'll say like, you shouldn't have done that. That was not good, right? So I mean, rather than that was great. So,
do you think it's going to take that long?
I think it will take us that long to get our heads around it. I think the technology is probably there already, but I think and look, being very sensible about this, right? We spent ages constructing a system of dispute resolution and that kind of stuff, which through trial and error, and it would probably be unwise of us to simply rush in and switch it around. So I think it will take us that long to figure it out and how to be effective. But I think it will be, place your bets on how long it takes.
Elliot, what's your kind of view, I suppose, in using like these AI or non-human type responses, I suppose, to deal with some of these issues, and will they actually be more effective, right?
I know there's a lot of nervousness about it at the moment, and you'll hear this sort of phrase a lot, agent augmentation. So it's not about pure AI resolving things. It's always supporting agents to do the stuff that they're really good at. We tend to look at it, rather than using AI to sort of spot needles in the haystack, using AI to remove some of the hay. So, you know, a lot of agent time spent wrapping up calls, typing up notes, doing all that stuff. We know AI is really good at it. We deploy AI there, frees up agent time, which, depending on which part of government you're talking to, can be, you know, 30 minutes a call, if not more. All of a sudden, that's redeployed on having the conversations, getting to the root of vulnerability issues, all that stuff. So I think that feels like the safe option for us at the moment as AI is developing in other ways.
Yeah, okay. I'm just looking at the questions here. I mean, Sheraz, you actually called out as being the top question around your £60,000 collector. Were they better in terms of generating outcomes? So,
100%. I mean, it's a shame that that business I was working in, we had to run off for other reasons. But we'd have gone to market with that. And just give them a massive mandate, right? Because actually that's why you have policies and procedures. It's to help people make the right decision. Another way of doing it is try and employ the highest skilled people that you can and then pay them appropriately. You know, so it's a real shame that I couldn't continue that experiment and tell you. But over the 3 to 6 months, we had really improved collections. They were doing loads of work, no complaints. And you know, we did a bit of sampling and just looking at the nature of the communications between them. It was just like people talking, you know, as opposed to formal letters going back and forth. And I think that's what probably created the better outcomes for us as a firm and also for the customer. It was just people talking, like you might talk to another, you know, a friend or a colleague, and without that formality, the, you know, processes, operational processes and regulatory stuff kind of seems to impose upon it.
but where's the balance with that? And Elliot, I like your piece around, rather than looking for needles, you sort of remove the hay. Where's the balance for that with maybe agents being paid a lot more and then maybe on less volume? Are the two of them kind of linked in terms of like having the automation and then having the extra, the richer resourcing?
Definitely linked. I'm not sure I'm going to comment on it. I mean, what I can say from a government perspective is the thing that's probably been missing in the debt space is the sort of, call it professionalisation of debt as a subject matter. So we tend to get people who work recovering debt for government. They're either finance professionals, accountants, it's a balance sheet activity, or they're operational staff. You know, there's thousands of them, generalist operational staff. What we're starting to recognise now is the negotiation element and the other real specialist elements. You know, you touched on it there. People are really good at negotiating. It's a huge part. Having those conversations, getting that information out of customers so you can help them is a skill. So what we're starting to introduce now is ways of building that capability in government to make sure that salary to one side, they're trained and they've got the right skills to perform in the role. You know, recognise the things that we're all talking about here and apply them, because it's a tough job being an agent. You're expecting them to, you know, go through security protocols, negotiate repayment, sort out complaints, but also spot vulnerability as it's coming up in those conversations is super difficult. And I think that's probably a space, again, where AI can help, looking for those keywords, looking for those indicators as the agent's doing the stuff that they're good at.
And Vanessa, I mean, when we heard, I think Sheldon Mills was mentioning at one of the events we were at, talking about using automation, using technology to kind of help get through more volume from a debt advice point of view. I mean, how does that kind of link in, do you think, in terms of what percentage do you think we need to have in terms of like automation using technology versus having, you know, great agents giving human to human kind of advice? I mean, how do we get that balance?
I think that is the challenge in terms of the balance. I mean, I'm hearing some major banks that are set to, remove 85% of their frontline contact centre staff and replace via AI. Now, that's a great win for the bank. I'm sure, you know, the shareholders will love that. But where are those 85% of people going to go? And what jobs are they going to be doing? So that's kind of an aside. That for me is like a balance out of kilter, unless they're massively inefficient and they haven't invested and, you know, they've got hundreds of thousands of people working there. I mean, and I think the balance for debt advice is absolutely to let the AI do the heavy lifting for the non-value add. And actually the human to human, which is where you get somebody to open up, you calm them down, you reassure them, you tell them what's going to happen next, explain why they've had a default notice, or why their council tax is due. That's the value add, not the and how much do you spend on haircuts and how much let's try and get more automation with validation. It's not we're not doing the open banking 100% a day, boom, that's your income and expenditure. It's going to be balanced, and I think we're all going to be learning. For me, AI feels a bit like where we were when offshoring first became a thing in the early noughties. The answer's offshoring. Brilliant. Okay. If the answer's AI, what's the question? And I feel like we're going to come full circle with some of this stuff, and we'll end up, because we'll suddenly realise that people want to speak to people at some point. And I think the bank in particular, who's set to do that, I would imagine in 18 months' time we'll be looking for some more people to help with the AI augmentation.
I mean, I think these things always change, don't they? As we implement new technology, then we have to react to it and we change, and so there might be some changes we see from a resourcing point of view, maybe on the upside. I suppose just to finish off, though, I mean, just get comments around, we're sitting here, in May, and we got till November, 6 months until till the next event. What do you think we have to look out for? And what are the things from an affordability, assessing affordability, vulnerability point of view? What's on our radar? What have we got to be thinking about or watching out for? I mean, Elliot, do you want to maybe go first?
Hot topic sort of thing.
Topics that are on your radar that you think everyone here should be looking at.
I mean, apart from the things I've already mentioned, deficit budgets, we know they're such a huge problem. And helping support people with deficit budgets is something that we're wrangling with. That income maximisation piece in that is really, really important, and I think we could probably do a little bit more in that space. So that's something that we'll be looking at and talking to partners about.
Okay, Sheraz, what are priorities for the next 6 months and beyond?
Well, I think from a sort of a lending and affordability perspective, I think what I think about a lot is how income tax will definitely go up over the next 3 to 5 years, and probably begin in the next 6 months. And there's just no getting away from that, despite what the politicians will say. And the reason for that is, as a sort of post-COVID, we all expect the state to do more. The state can't do what we want it to do, and therefore we're going to have to fund it more. Our state, the size of our state in terms of percentage of GDP, is approaching European levels. The biggest difference is the median income earner in most of Western Europe pays around about 40% tax. The median UK income earner pays around about 25% tax. So our tax base is incredibly thin as a pyramid. And that just is not sustainable as the state continues to do more. So I think we're going to see a pretty big increase in the amount of tax that the general public pays, and they're not used to that, right? And we're also still in this kind of money isn't cheap anymore, mortgage rates are never going to kind of go back. I think at some stage we need to stop talking about it as a cost of living crisis, because it sounds like it might abate itself. I think we're in a sort of a new normal, to use another horrible phrase, in which things are just more expensive because we've been subsidised by cheap energy and cheap money for far too long.
So it's watching that affordability, and so it's taking tax into kind of like, and when you're talking about that bifocal kind of, or the bipolar kind of like nature of the portfolios as well, it's going to impact not just the higher end, the prime end, but also it could have an outsized impact on the people with who are less well off, I would think. I mean, sorry, I don't know if that's what you think.
Yeah, no, absolutely, because those who are in the lower income quartiles have less free income, so the impact of more tax is going to be felt on them some more. So we talk on one hand about income maximisation by helping people claim more benefits. Well, that just puts the tax bill up, right? So we've got to kind of pay for that somewhere. And I think for me, we write 3, 4, 5 year loans, right? And they sort of say to us, can you predict the future, and can we predict volatility? Having said that, we all know we can't in our affordability calculations factor in now a 20% increase or decrease in their income, because we think tax might go up. So I just think we're going to have this increasing volatility as these macroeconomic factors continue to influence, more life will happen to people, and we're going to have more and more people needing support.
Okay, fabulous. And Vanessa, last word.
It's really nice to end on a high, because basically what you've just said for the last 3 minutes was exactly what I was going to say. I think the other thing, so this is not a crisis, this is not a cost of living crisis, it's just the new normal and things are more expensive. I guess for all of us, it's not even predicting, but we just have to live with volatility. So anybody that takes an interest in their pension, after a certain person over the pond, went nuclear on tariffs, I mean, it was horrendous, seeing what's happened. Luckily, it's starting to recover, but we have just got to get used to being alert to that volatility and helping build relationships with our consumers to get used to that.
Yeah. Okay.
And we're no longer in a crisis. It's just more expensive to live in the UK, and by all accounts, it's going to get even more expensive.
I mean, it's going to be. I know this has been a huge area of focus, and it sounds like it's going to continue to be. So I know we've got to finish now because of we've got the event upstairs. But I wanted to thank each of the panelists just for joining us, making their comments, and just give them a quick hand. So thank you very much.